Hello friends, I am Dr. Ozgur Duymaz. Today we will talk about how easy to learn finance and accounting. I believe that it's not difficult to learn them. You can be a student, trader, business people, manager or a staff. I'm sure that you can make better what you do by using simple finance knowledge. For example, you're a sales manager candidate. Do you think it's not important to manage your department budget? Many people take an MBA program for this reason. You know, it will be easier to it for you by knowing logic of finance. Or you want to establish your own business. It's a big or small business. It doesn't matter. You need a financial business plan for you and for potential investors. Another case, you are willing to invest a listed company from Nasdaq. If you are able to analyze the financial statements of the company you will invest, the result of the analysis will probably affect your investment decision. Today, I would like to prepare a business plan for a small business on Excel. You can do it with me at the same time. Just write the parameters I gave on an Excel file, then keep moving with me. Please note that on the next video, we will prepare financial statements with you. I would like to show a business plan for a small business, for instance, a restaurant. This is a simple mathematical model which shows us how much money we need as a capital and how much money we might earn. Of course, we need some assumptions, sales, expenses, cost, payment maturity, etc., etc. According to our market research, we are planning to put 10 tables in the restaurant, and each table has 4 chairs. It means we have 40 chairs. Open the mount hour, it means 10 hours per day the restaurant will open. Multiply 30 hours, it means 300 hours it will operate per month. Average sitting time for each client, each customer is 1 hour. And we calculate total customer number for month is 40 chair multiply 300 multiply 1 hour, and average unit price we assume $10. It means total monthly revenue is 120,000. If you look at the expenses, we assume that this restaurant rent cost will be 15,000. Staff cost is, we assume that maybe 5, maybe 6 staffs we need for every day. It means $25,000 is a staff cost. Cost of goods sold, it means it's a production cost. Food cost is 30% of the sales. And contingency means maybe there will be some cost which is unpredictable. I assume that $3,000. And you know, some sales will be cash, some sales will be by using credit card. And we assume that 60% of the sales will be via credit card, 40% is by cash. And you know, bank deduct 0.5% from credit cards as a credit card commission. And tax rate, according to this states, 20% we operating. And we need, of course, while during the operating the restaurant, we need a fixed asset budget, decoration, kitchen materials, something like that. We assume that this is $150,000. Useful life for fixed asset is 5 years. It means we can use these fixed assets for 5 years. And after 5 years, we should renew it. And it means, according to accounting law, 20% for each year week is a deductible cost from revenue. It means it means this is a depreciation expense, and you know, if you divide the 20% divided by 12 months, it means 1.68% for each month as a depreciation cost that we can record it. If you look at the payment maturity, cost of goods sold, it means suppliers from foods, water, maybe a drink, some drinks, maybe alcohol, we should pay within 1 hour, 1 month. And we will pay fixed assets with three equal installments. Other expenses, which are rent, staff, and contingency, will be at the same month. Maybe you can find another expenses you can add here. And first of all, we will prepare a profit and loss statements, and we will put the sales amount that we will calculate. After that, we will write the expenses here, and we will find the gross profit, and we will calculate a tax from gross profit, and we will find a net income. It will show us each month by month earning of this restaurant that we will planning to operate. And I will write the sales and this is sales amount 120, and we assume that all months the sales amount will be same. But in fact, you will first month maybe you can put a less than the other one, and you can increase it. And here costs and expenses. This is sales multiply 30% of sales, but we should fix 30% here as a formula. We should put a dollar, get that, and cost of goods sold. The other cost is rent, and this is 15. Staff costs, also credit card commission, it means the sales 120,000 apply, it was 60% of the sales, multiply the credit card commission rate is 0.5%. It means the monthly cost is 300, and I need to fix this sales Sorry. And contingency. 300. Also depreciation costs. This is fixed assets budgets. We already calculate monthly rate of depreciation rate, which is 1.68%. And always we should fix. Don't forget to fix it. Fix the cell that you work on. Sorry, I think something wrong because we also should fix depreciation cost, and we can calculate total expenses. And we can calculate total expenses. Now it's easy to find the gross profit. Now it's easy to find the gross profit. This is sales minus costs and expenses. And this is also tax base. Our tax rate is 20%. Gross profit multiply 20% tax rate. And I will fix it. Don't forget it. Don't forget to do it. Yes, and finally it's enabled to find our net income. Gross profit minus tax. Yes. Yes, this is profit and loss statements. Yes, now it's nice. It looks nice, but how much money we should inject as a capital? To calculate it, we need a cash flow forecast. And at the beginning of the month, Then incoming cash, cash out, and finally we need at the ending of the month. Yes, this is zero cash inflow. Incoming cash, it can be capital. Coming cash, it can be capital. Also sales from cash or cash sales. Or sales with credit card. If you look at the cash out, it can be cost of goods sold, production cost, it can be rent, it can be staff costs, it can be contingency, it can be fixed assets, yes. Now I will not write anything into the capital sales, we will find it later. And cash sales, 40% of the sales will be cash because 60% credit card. Cash means we will collect at the same month the sales will happen. Means month multiply 40%. And rest of them for January, for first month sales will be called as second month as a credit card, and by using credit card rate. And don't forget to fix it. And total incoming cash for each month. And cash out, cost of goods sold. Cost of goods sold will pay after next month, after 1 month. It means cash flow first month we will pay second month, and we can continue the formula. Rent costs will pay same month, beginning of the month, and land order require 1 month rent as a deposit. We should add it. And staff costs you should pay end of the month, at the end of the month. And contingency you should pay at the end of the month again.
Also we add here credit card commission. You shouldn't forget it. This is important. And fixed assets, you should use 3 equals installments. And 1, 50,000, 100,000, and total 150,000. And tax will pay end of the year. It can be quarterly basis, depends on the government, but we need a total tax will pay end of the year. Yes. And let's calculate it. Total cash out. And I wanna show something. Yes, end of the month, sorry. Yes. Beginning of the month is 0 plus minus cash out. And first month's end of the cash transfer, the second month beginning of the cash. Look. And again, formula, this is, and go. And go. This at the end of the month cash cannot be minus. This is minus 60, and this is a cumulative. The maximum minus is third month. That means if we inject this money, for example, capital. Okay, first month is okay, but look at that. It means at least capital. We need this money. This is important for startup. But this is the base scenario. The worst scenario that, for example, about the sales, what if the sales decrease 60%? What happened? Look at that, and look at now income, and still we need money. Instead of approximately roughly 80,000, at least this money. For this business. And end of the day we have a profit and loss statements, also cash flow statements, and according to worst case, this is our monthly income, net income, and this is our cash flow. We read it. And at least we need this capital.